Hey, what's up everybody? Today is Tuesday, February 2nd, 2015. It's the first trading day of February, a new month and a fresh start. I'm going to start off by looking at the ES, and I've got the trading hours only turned on, so I'm only looking at market data from the cash session. And I'm going to go out on a limb and say that we are still holding within the inverted head and shoulders. And why I say that is because when I put on the 24 hours worth of data, the Globex session, it's pretty clear to see that we still have the left shoulder, the head dipped down, and then we have what could be forming the right shoulder. And using the 24 hours data, we did not take out the prior swing low. So until the overnight session of 116, that low of 1970.25 is taken out. Currently, we hit 73.75. Until that low gets taken out, I'm not going to deviate from my original thesis of an inverted head and shoulders. We do have the double top up here. Last week's video I was talking about how important the high was, and if we could just take out that swing high, that would confirm the rally, or confirm that a rally would be forming. And we did not take out that swing high, but we also didn't take out the swing low. So I'm still, for those reasons, still holding the same sentiment. If we look at a couple of the things we were talking about last week, like the VIX, we got up into the low 20s, but again, we didn't break up into the into the mid 20s, that 25 range. We didn't break the swing high. We're still, kind of right in the middle. So no major confirmation with the VIX. Gold, same thing, just a little bit of a pullback, but still in that breakout formation. So all things, kind of aside from some of the individual stocks, and the broader picture, not a whole lot has changed. The S&P, we do have, again, some strong volume on the upswings, as well as matching the strong volume on the downswing. So one interesting note, if I flip through the some of the other indices, the Dow came down today and made a nice double bottom and rallied off that low. The Russell it's also has a touch, second touch, and now a third touch with an immediate rally off the low on good volume and a nice hammer formation. And then the last one is the NASDAQ, and same thing, kind of 1, 2, 3, 4 touches. So a very clear line in the sand, which is why when I come back to the ES, I talk about this overnight low being an important swing low. If we're just looking at trading hours only, we could pull the low from back here on 12/16 of 1963 and use that as our line in the sand. Either way, they're close enough where the prior swing low is what's important. And if that were to break, then the setup or the entry point that I'd be looking for is a break of the lows and then the rally back up to lows and shorting on that test. Same situation if we come up and break this swing high. I would look for us to kind of get that rally and then pull back into this support level, or pull back halfway and then take the 50% long after we've broken out, versus just taking a 50% long when we double top. So for instance, back here, we just had a double top. Well, just taking the 50% long, is good for a small bounce, and then we traded at the opposing, and then the opposing is what sold off short. If we get that rally above the swing high or below the swing low, we can take from the anchor point down to lows, and then once we break lows, draw the 50, let the market start to rally, and then get short with with the next 50% retracement that in theory would line up near prior resistance support that would then act as resistance going higher. A couple other things that I wanted to touch on. We were talking about some individual stocks last week, like Google, and when I look at these stocks, they're still relatively strong to the market. So that's a pretty bullish sign when stocks like Google and Apple also just about to continue its run to new highs here. I got a couple other on my list. Netflix also looking strong after the earnings. Home Depot was one we were talking about a few weeks ago. A little bit of a sell-off and a nice little hammer today. Amazon, another one. Nice rally off of earnings. So a lot of these individual stocks, and as well as some of these stocks that make up the S&P, are pretty strong in the sense that they're trending up, whereas the market is trending sideways to down. So I'm going to keep with the theory that we're in an inverse head and shoulders right here. We could also be in a very large triangle, but regardless, all that the sentiment or all that our theory or opinion gives us is just some kind of context for what we can expect intraday. Last week we talked about how when the market is in the very sideways consolidation period, we shouldn't expect large moves until we break out of that consolidation, or that point at which we're about to break out, such as a swing high or a swing low, is where we can expect violent moves and where we want to hold or trail our stop as opposed to just taking a quick profit. So just looking through my list of notes, I think I've touched on everything for today. I guess the biggest takeaway is, we either want to wait for confirmation, so wait for that breakout before getting into a larger trade, or get into the trade as early as possible before it's even showing a sign of a breakout. When you get stuck in this middle range, that's where you can get chopped up, and even if a trade ends up going your way, sometimes it doesn't go your way fast enough or far enough to really give much of a profit. So we'll look for the market to kind of drift its way up to this downtrend line, if you will, and we'll see if we can break out of the downtrend line, the prior swing high, and then move to new highs. And then scenario B would be that all of these stocks that are trending higher somehow get some catalyst or some activity that starts to push them lower, as well as the market selling off and breaking these swing lows in conjunction with the VIX moving higher. And that sell-off would then take us to, certainly new lows on the year, and would give a lot of pressure to any bulls that are out there and looking to sell or to short at these lows, because we've touched now 1, 2, 3 times. I guess you could count that as a fourth touch of this 1980, 1970 to 1980 level on the ES. And that's, an important level, because the more times we touch a level, the stronger support it is. So when it breaks, the stronger resistance is going to be on the flip side. So we'll leave it at that for this week, and I hope you have a great week of trading, and we'll talk to you again soon.